So you're listening to Tampa Home Talk, and we have another best-selling author, Darrin T. Mish, of the law offices of Darrin T. Mish in Tampa, and he's ready to share with you this morning the 7 secrets that the IRS does not want you to know. And he's actually written a book to this, as well as he's written and also co-written several other books related to everything from marketing to tax debt. Right?
That's correct.
And so he also has a lot of he can talk about tips and tricks. And when you have to deal with Uncle Sam, you know, wearing the Men in Black shades known as the IRS, this is really your go-to guy. If you're up against a tax audit, if you're getting letters in the mail and you need to just figure out where you stand and you're looking for some legal advice, I would highly recommend that you reach out to him. We'll post his information on our Facebook page. So, Darrin, welcome this morning. I appreciate you coming in. We'll be airing Saturday at 4, and so our listeners are listening to us this afternoon, and talk about some of the stuff you do for your clients and your specialty.
I want to say thanks for having me in studio. It's kind of a surreal experience. There's all these bells and whistles and lights and stuff going off, and I also have to say, following Michael, what a tremendous guest, and what a big hurdle I have to match the value that he just provided. But it's great to be here, and I just can't wait to get into the meat of the 7 secrets that the IRS just doesn't want you to know about.
So I know we always have the chance to plan with our guests in advance and talk a little bit to them about what they do and who they are, and just really kind of get into some of the details, because we want to make sure that we just bring you the best guests that we can here on Tampa Home Talk. So I know one of the things that we talked about, and I don't want to forget to ask this, so that's why I'm going to bring it up first. I know we were talking about, can the IRS ever force a sale on a homestead property? And I guess can and would they are sort of 2 different questions, but can you share on that?
You know, that's a great question, and something that people are really fearful about. There's this myth out there that the IRS can go ahead and seize your home if you get behind on your taxes and you just can't pay. And although it's technically possible under federal law, it's very, very unlikely that a typical taxpayer, even if they owe hundreds of thousands of dollars, that the IRS would ever seize their homestead. Now, another thing that people get confused about is there's the Florida Homestead Law. And the Florida Homestead Law, obviously, is state law, and it talks about the fact that creditors, normal creditors, cannot get to that homestead protected property.
Like collection agencies, if you owe somebody for a medical bill, something like that.
Exactly. And Florida actually has one of the very strongest homestead protection laws in the country. In fact, when we think back to O.J. Simpson, remember they got the big verdict against O.J. in California, and then where did he move? He moved to Florida so that he could sink whatever money he had left into a homestead so that they couldn't take his home from him. Now, the federal government's a little bit different. There's something called the Supremacy Clause in the Constitution, and it basically stands for the proposition that federal law supersedes state law. So, unfortunately, the IRS can, and sometimes does, seize primary residences. However, in my practice, I've been representing clients in this area for over 15 years. The only primary residence seizures I've seen were instances where people were, for lack of a better term, they were tax protesters. They were people that felt like taxes were not constitutional and were unlawful. And I don't even want to get into that whole mess here today. But those people get singled out for special attention.
I bet. Yeah, they're looking for them.
and so sometimes the IRS will go ahead and file a federal lawsuit and ask a federal judge to seize their homestead.
I'd like to relate that to real estate for just a moment because, again, we never give legal advice, of course, right? We always say our scope is within real estate, so we're not going to give you any tax advice or legal advice. However, I get the question a lot of times, since short sales are kind of like the buzzword in the market, I get the question, will the bank pursue? Because we can never answer like what that letter is going to look at. And I always tell them, we don't know what we're going to get until the end when it's all done. And then they will clarify out and specify if they're going to pursue a deficiency judgment. But we can never tell if that's going to happen or not. But the likelihood of us ever seeing that happen is slim to none. I can say I've seen one time, the entire time I've been doing short sales, which is for many, many years, where the lady actually had 3 mortgages with the same bank, and the third one was sort of a cash out refinance. And so I think they were kind of pursuing that more as just an intentional, that's the only one I've seen for as long as I've been doing this. So
you actually saw a home seizure in that case?
Well, she had actually already short sold the property, but they were pursuing her for the difference of the deficit, the liability in between.
Interesting.
Yeah, but again, it was 3 mortgages, and there's some different laws right now to protect you against that type of stuff. And I know, so Darrin, you get a lot of I asked you for your top 5 frequently asked questions. And so one of the ones on that were, will this tax debt haunt me for the rest of my life? And before we get into that, can you just share, like, who are some of the regular people you see? Like, who are some of the main clients, the regulars?
Our typical people that come in are people who are typically small business owners, and so they're self-employed or they get a 1099. So they're not typically wage earners. And because they don't make estimated tax payments, because either they can't or nobody's ever explained to them how to get that done efficiently in a way that they can live financially, so they end up owing taxes, and they file a tax return. They know there's going to be a big balance due, and so sometimes they don't actually file the return. They prepare it, and they put it off, and before you know it, it's been 5 years, 10 years, and it's just a big hurdle, and they emotionally and mentally can't handle it.
Now, I think what you're talking about a lot of time is with regards to your payroll taxes or your self-employment taxes and things that you should be saving for. We're going to talk a little bit on tax planning in just a moment. We're going to go into some of those details on how you can avoid having the tax debt that will haunt you for the rest of your life. But in just a moment, when we come back from Tampa Home Talk, Darrin is going to share if and how and why that tax debt may or may not haunt you for the rest of your life. So whether it's you or someone you know, stick around, and in just a moment, we're going to tell you all about that. Welcome back to Tampa Home Talk. In studio, we have Darrin T. Mish from the law office of Darrin Mish. And we just left off in our last segment talking about who the typical person is that gets into a lot of trouble. And it's not maybe the person that you're thinking. A lot of times it's just a self-employed person that maybe got into trouble, had a surprise when they finally got their tax return prepared, and now they're just not sure where to begin because they either owe a lot of money or they didn't make payroll taxes or something like that. So the one piece of advice I would like to give to the person listening right now would be from experience. And when I say this, I mean, basically, you want to make sure that you have really good tax advice and you have a really good tax plan starting off, because if you don't, it can get you into a lot of trouble. Right?
Absolutely. You know, planning solves a lot of headaches down the road.
So most of the stuff you're seeing are people just not filing, or is it people that actually owe money, or like what's a lot of your atypical clients?
It's an interesting stat that 10% of the population doesn't bother to file a tax return. And when you think about that, that's really a staggering figure. That's part of the big tax gap that we hear about all the time in the media, that there's this huge difference between the amount of tax that should be paid and the amount of tax that actually is collected. So non-filing is a big problem, and it's a problem for the government. It's a problem for the taxpayers as well, because the IRS will go ahead, and if they have enough information to file for a taxpayer who hasn't filed, they will go ahead and do so. And this is...
What do you mean by that?
The IRS will file something called a substitute for return.
So if you don't file, they will actually file a return for you?
They absolutely will. And let me tell you, there's a bit of a difference between their figures and your figures.
What do they base that on? Do you know?
What they do is they take just the aggregate data that they have. So the 1099s, the W-2s, the 1098s, that tax information. And they go ahead and they prepare the return, either single or married filing separate, 0 deductions, 0 exemptions, no business expenses. And they just calculate it by the tax rate. And big fat number and big fat penalties and interest comes out the back.
So what happens at that point? I imagine they just get letters saying that they owe taxes based on the return that the IRS just filed for them. Is that how it works?
Well, yeah, that's when the collection process starts. And so there's a timeline for all these things. But eventually, when they prepare that substitute for return, they will eventually start to try to collect that money from the taxpayer. And especially down here in Florida, our population is so transient that they've probably moved since they didn't file that tax return 5 or 6 years ago, and so they don't even know about it, and they don't find out oftentimes until really bad things start to happen, like wage garnishments and bank levies.
I'm curious, do you know, like, if someone ever, maybe they had a job but they're unemployed now or whatever, does that ever happen to someone like that, or no?
Oh, sure, it happens all the time. It happens to low-income people who, they buried their heads in the sand. They didn't come to deal with this. The IRS prepares substitute for returns. Taxpayer thinks, I got away with that, or that's never come back to bite me. And now they find themselves at the lowest point, their lowest financial point in their lives, and all of a sudden Uncle Sam comes calling, and their bank accounts frozen or their wages are garnished or even their unemployment compensations is garnished.
I don't think a lot of people realize the power that the IRS has, and they can actually freeze your bank account, which means when you go to use your ATM card or your debit card, you're not going to be able to get any money out.
You know, those are some of the most frantic calls that we get at the office.
How do they figure that out? Basically, it doesn't work, and they go into their bank, and then they realize, does the bank inform them that the IRS has frozen their account? Is that how that works?
Well, fortunately, I don't have intimate firsthand knowledge of a bank levy. It's never happened to me.
I'm just curious if that's about how, I imagine that's how it works.
Yeah, I think what happens, the stories that I hear is, hey, I went to go get, or, you know, I went to use my debit card to put gas in the car or whatnot, and it was declined, and I called the bank, and they said, oh, there's something from the IRS, and typically the client doesn't even know what it is. And then eventually when the bank, you know, it always happens on a Sunday, right? So then when the bank opens on Monday, they call and they ask, well, what's the deal? And they find out that the bank or the IRS has actually levied their bank account.
It's kind of a scary feeling, because if you can imagine if every single thing that you have is in the bank and you don't have any cash put away or anything, like, you're not even going to be able to buy food for your family at that point. So how do you handle that from an attorney that really specializes in this kind of stuff?
Well, bank levies are sort of one of those last resort things. I mean, hopefully we don't get a lot of clients that wait that long, because when you have a bank levy, there's not a whole lot you can do. You're sort of in a begging situation at that point. And sometimes we can get bank levies released rather quickly because of hardships. You know, if we can demonstrate that this is causing an economic hardship, which means by definition the inability to meet life's basic living costs.
Can't feed their family. Yeah. They can't pay their mortgage.
Right. Food, clothing, health care, shelter, you know, those kinds of things. If we can demonstrate that, then we can get it released. Sometimes in a day, and sometimes it can take weeks, because oftentimes that's hard to demonstrate.
Now, they usually probably want to work out a deal, though, first, right, before they'll unfreeze that, I would imagine?
Not always.
No?
One of the big hurdles to getting levies released, either wage garnishments or bank levies, is that there's a requirement that tax returns, missing tax returns, unfiled tax returns have to be filed and processed before they will release those levies. So think about this. Typical client has a bank or wage garnishment, and they have 3 unfiled tax returns. So now
this is a 3-year problem. It's been a snowball effect.
Yeah, maybe the IRS did some substitute for returns, and there's some big fat number that they owe for those, but then there's the last 3 years are still missing, and there's this technical requirement that says, hey, the IRS is not going to release that levy, not going to stop hammering you until you get those 3 tax returns done. They haven't budgeted for this. They haven't filed a tax return in years. They don't know how to do it. They don't know who to go to, and they don't have the funds or the resources to get it done.
And they're probably scared out of their mind. I mean, let's face it, who wants to owe the government money? Nobody.
No, I can't imagine that it's a very happy place for people to find themselves in that situation.
So does the tax debt haunt you for the rest of your life? Like, is it something that follows you around forever when you get in this predicament?
All right, great question. Back to, I think that's the #1 secret in my 7 Secrets book. Actually, there is a statute of limitations for the collection of tax. Now, in English, what that means is the IRS only has 10 years from the date that the tax comes onto the books to collect it. Again, what that means is if a taxpayer ends up filing a return with a balance due and the IRS cannot collect it or does not collect it from that taxpayer, after 10 years, the IRS has to write it off and it disappears. Taxpayer wins, government loses.
I was, reading some of your reviews online from some of the things that your clients talked about, and I noticed that one of your past clients left a review online that talked about that. He talked about the statute of limitations and how he was so glad he met with you because he actually didn't know the government anything. They had waited too long to collect.
Yeah, that's not all that uncommon. I've had a gentleman who came in a number of years ago, and he sat down and he said to me, I think I owe $99,000. And this is certainly not typical. And I said, well, why do you think you owe $99,000? He says, well, I've gotten all these notices over the years. I said, well, what tax years were they for? And they were for, 13 or 15 years prior. And how long has it been since you've heard from the IRS? Well, it's been 5 years. I said, okay, well, let's take a look. Maybe the statute of limitations will apply. And lo and behold, he didn't owe any money at all.
Wow. That's crazy when you think about that. And so how small does a balance like that typically start out? Does it start with the unfiled returns mostly?
Yeah, that's one way that the interest and penalties just balloon out of control is the substitute for return process, because they're not giving you your legitimate deductions and exemptions. They're just calculating tax basically on a gross figure. So that's one way that they grow very large. But you can assume that if you have a very late filed or very old tax return, that with interest and penalties, that liability will essentially double over time. So if it was $50,000 in tax, it's going to end up being about $100,000, give or take, after a number of years.
So how does that work if the IRS, say, files one of these substitute for returns? Is that correct? Am I saying it right?
Yeah.
If they file the substitute for returns, how does that work as far as from the taxpayer standpoint? What if they say, you know what, fine, I'm going to deal with this. I'm going to go ahead and just put together my bank statements and all this stuff, and I'm going to see a tax person and create a tax return. Then can they actually file their own return?
Yeah, there is a process that we go through to produce that legitimate return to the government. And in many cases, we're able to get them to reduce the tax penalties and interest to the proper figure. Some
of these things, I know that I've, over the years have talked to different clients and that type of stuff. And I know that some of these can start out as small as a couple $1,000s or $5,000. And what's one of your horror stories? What have you seen a $5,000 tax bill turn into at the end?
Oh, well, certainly I have stories or examples of people who legitimately owed $5,000 at the end of the day, but they went ahead and filed, or the IRS, the taxpayer didn't file. The IRS prepared a substitute for return, and then 9 years passed. And so the tax bill at that point is $300,000, and ultimately they only owed $5,000. One guy comes to mind. He's a truck driver, an independent owner
operator.
Right.
Yeah.
And so they have tremendous fuel expense. They get paid a lot gross because the fuel is such a huge portion of their total expense. Mm-hmm. So they might bring in $300,000 in total revenue, but what they get to keep might only be $40,000. And those guys work really, really hard.
They do.
And so if they don't get around to preparing a tax return, which is totally understandable considering they live on the road.
They live, they sleep, they eat in a truck.
Right. It's totally understandable how they missed a tax return. If the IRS prepares a substitute for return, they're going to calculate that tax on that gross figure, on that $300,000. When in fact, maybe that gentleman was going to get a tax refund or very little.
So at this point, he can meet with you, and you're going to try to wash that or break it even or do as best you can with what you have to work with at that point.
One of the things we're able to do is we can obtain from the IRS records that actually benefit the taxpayer. So we can get transcript information from the government so we can tell exactly what's going on. And we can also obtain transcript information that tells us what W-2s and 1099s and those other tax preparation documents that we all use in April.
Well, the tax transcripts, meaning whatever their employer has sent to the IRS that they filed on their behalf.
Right. And the other type of transcript tells us whether or not the IRS has prepared a substitute for return, if the taxpayer has filed returns, how much they owe, what the interest and penalties and whatnot are.
Okay. So that's good information. I'm sure you need it to even start from that place.
Yeah, it's kind of like we get the playbook from the IRS ahead of time, and so we can tell what we're dealing with. Because people's recollections of what returns they've filed or what's happened in their lives are not very accurate. I mean, they try. They try to tell us what has happened, but can you remember, exactly when you filed your 2003 tax return?
No, not at all. I have a good memory, too. I mean, I can look back through stuff and remember things, but no, nobody can remember that.
No, and we also have to be able to tell, well, what's the IRS's opinion of what's transpired? Because sometimes a taxpayer will file a return and it just doesn't show up. It doesn't get clocked in at the IRS, and so it never gets processed. And so in that case, it's pretty simple to fix. Do you have a copy of the old return? Yes. Let's sign it again. Let's send it in the proper way, and let's make sure it gets on the books.
So what happens when these people connect with you and they give you a call and they show up in your office and they say, hey, this tax bill is now, it's way more money than I can ever afford. I don't even make that much money in a year.
Okay, so the typical person that comes into the office is anxiety-ridden. They're just an emotional wreck, and they don't know what to do. They're scared. They've never been more afraid of their lives, and they feel like they're at their low point. And my favorite part about my job is I get to help people legitimately. I can transform them by information that I know and experience that I have. I can oftentimes transform them physically and emotionally right there in the office with a consult. They just need to know the information that they don't know. There's a lot of information that they don't know that they don't know.
Well, you're listening to Tampa Home Talk, and we have Darrin Mish in studio today, and he's going to continue that thought when we come back in just a moment. He's also going to tell you about bankruptcy and how it may or may not be able to help you solve your IRS tax problems. Stick around. We'll tell you about that in just a minute. Welcome back to Tampa Home Talk. This is Katrina Madewell. We're here every Saturday on 1250 WHNZ. Very happy to share my special guest today, Darrin Mish. And right before we had to take a quick break, we were discussing how people can repay that huge amount. There actually is a way out, and you help people with this every day.
Absolutely. Absolutely.
So what about bankruptcy? Because I think a lot of people have the misconception, including myself, before I met with you. If you have some issues or you have a lot of debt, whatever, I mean, I think the best place to start would be to come in, tell you their situation, and then you will help them figure out where to start. Yeah, but how does bankruptcy play a role in that? Does it?
We have a bankruptcy division in our firm, and really, I think the better question would be, can taxes actually be discharged or eliminated through the use of a bankruptcy filing? And it's fascinating. It's almost every day a client comes in, and during the course of the consultation, I raise the issue of a potential bankruptcy. You can ask them, do they have other debts in addition to their tax debt? And almost every client says, well, why are we even going to talk about that? Because bankruptcy can't discharge taxes. And it's at that point in the consultation, I just kind of smile and I go, yeah, that is the conventional wisdom. In fact, 9 out of 10 bankruptcy attorneys will tell you that, no, income taxes can't be discharged in bankruptcy. But I'm here to tell you that they can. It's right there in the bankruptcy code. But one of the problems is there's a lot of double and triple and quadruple negatives in the code that make it really hard to read. But I can go over the 3 rules with you. We shared that in the office when we met. And there's 3 rules. The returns have to have been due for at least 3 years, including extensions. They have to have been filed, if they were filed late, for at least 2 years. And the taxes have to have been assessed for at least 240 days. Now, it took me a couple years to actually understand those 3 rules.
To unwind it and figure it out in lay terms, right?
Yeah, so it might be a little bit hard to explain here on the air today. But in general, and this is not specific legal advice for any particular person, but in general, if you filed your returns roughly on time, and when I say roughly on time, I mean within a year or 2 of when they were due, and they're 3 years old and they've been filed for at least 2 years, then there's a pretty good likelihood that those income taxes, those 1040 taxes, not payroll taxes, but those 1040 taxes might be dischargeable in a Chapter 7 or Chapter 13 bankruptcy.
I think to me, that was amazing information. I love doing these shows because I learned something on every single show that I do. And like you said, 9 out of 10 people come in, they don't think that taxes that they owe or can be discharged in a bankruptcy. I mean, who would have thought?
That was actually 10 out of 10 taxpayers don't
10.
know, and 9 out of 10 bankruptcy attorneys don't know. So it's really sort of secret information.
Scary. That is really scary.
It is, and it's because it's hyper technical. It's a very niche sort of practice. But when I'm talking to that client that, remember, is anxiety ridden and freaked out and probably has other financial problems in addition to their taxes, one of the things we want to know about is, do you have a lot of other debt? Do you have a lot of consumer debt? Are you behind on your house payments? I mean, that's where we're at today. And if I can solve the problem, or if the taxpayer, the client, can solve the problem with the filing of a bankruptcy and it zips up their IRS tax debt and their other debt problems, well, that's a happy day for me, even though, honestly, the fees are about half what they are for a typical tax representation client.
And I would love to work with you and your firm a little bit more to help these people create a plan and kind of get back on track. Because you and I talk that people don't save. They don't know how to manage their money. They overspend. So again, that's one of the goals of our show. But will you share with me, and I know you told me, but I want you to share with my listener, why do you do what you do? Because your area of law is so specialized.
Sure, no problem. It's sort of interesting. I got out of law school in 1993, and I opened my own practice in 1996, so it's not all that much longer. And when you're in law school, they don't teach you anything about running a business. There's absolutely zero training, and I'm not sure there's any of this training in business school either about how to make payroll, how to pay payroll taxes, and how to make sure that you make your estimated taxes and whatnot. And the way I ended up an IRS problem resolution attorney is because I actually had an IRS problem myself. I didn't just have one IRS problem. I had 2. I ended up I owed income taxes because I didn't know how to make estimated tax payments. And if I did know, I didn't want to know about making estimated tax payments. And the second problem I had is after I hired staff, I didn't do my payroll taxes
how to manage
appropriately.
That stuff.
I had no earthly idea what I was supposed to be doing here. And I think that's really common. Going back to Michael Gerber's book, The E-Myth, where we talk about
the E-Myth.
Where we talk about the good baker goes and opens a bakery because he thinks that a good baker should. Yeah, it's all about baking, and it's really not. It's all about running a business. And that was one of those things that I didn't have any experience with at all when I was a 28-year-old kid opening up my own practice. I was just happy I had cash in my pocket, to be honest with you. And so I went out and I was looking for help on, okay, so how do I solve these two problems that I have, my personal income tax problem and my payroll tax problem, and I couldn't find any help. And that was kind of a scary place. There wasn't anybody that I could turn to that could explain what I needed to do. And so being kind of broke myself and young and resourceful, I knew how to read. So I went ahead and I read up on it, and then I solved my own tax problems, quite frankly. And that was the epiphany that I had that, hey, there's a niche here that people really need this, because I didn't know all that much money. And I can tell you, I was scared to death. And I was actually a criminal defense trial lawyer at that time. And I felt like I was pretty bulletproof and pretty confident.
Not at that time.
Not when the IRS comes and they're talking about levying your paycheck and putting liens and whatnot and ruining your credit. It's a pretty scary place to be.
I can relate to this, Darrin, because I've been in this industry since I was 18 years old. I started on the mortgage side. At 23 years old, I opened my own mortgage company. And I opened it with a partner at the time, which was a family member, and it ended up bad. But long story short is we got some very bad tax advice. I mean, just starting from go as far as what type of corporation to open and how, what we were paying ourselves on payroll. Like you don't know what you don't know until after you realize you didn't know it. Mm-hmm. But the long story short is I was pregnant with our first child, 25 years old, had an office, mortgage office, was doing good, kind of like you at that time. And here I am pregnant, out to here, I don't know, it's probably 7 or 8 months pregnant. And I get an IRS officer that comes to my door at my office, like literally came in. And apparently there were notices and all that stuff. The bookkeeper was ran off, whatever. At that time, I owed $20,000 in payroll taxes to the IRS, which is the worst kind of tax you can owe, right?
Absolutely. And not dischargeable in bankruptcy, ever.
I was 25. I was scared out of my mind. I was pregnant, and I didn't know you at the time, but man, I wish I did. And I got to tell you, I think God was looking out for me that day, because here I was, this pregnant woman. I had a lady that was an IRS auditor, and she worked with me to get that, get payments under wraps and really just kind of figure that out. And I was just glad it worked out the way it did. But it was a learning experience for me. I learned a lot from that.
Those folks that come out to your house or place of business are actually called revenue officers, not auditors. And revenue officers' job is to get the money. And I have nothing negative to say about revenue officers. I mean, everybody's got a job and they have a job to do. But in my opinion, revenue officers aren't really problem solvers. They're just there to get the money for the government. They're not going to figure out how you're going to get the money. They're just going to get the money. And if that means they're going to take it out of your bank account or your retirement account.
She explained this to me very clearly. She let me know that she would be more than happy to seize my bank account and my partners, which at the time didn't care. And I just couldn't live like that.
So let's think about this situation. The federal government has this very experienced person who's there to get the money, and you as a taxpayer are completely defenseless, have no idea how any of this works, have no idea what the government can or can't do to you. I think that's a scary place. I
know next week we're going to have some tax or some credit gurus on our show to tell you how to fix some of this mess and the issues on your credit once you get it. And they'll tell you how to work on some of that older debt, like collections and that type of stuff. So make sure you tune in next week at 4 o'clock here on 1250. You're listening to Tampa Home Talk, and we're always here to give you credit tips and things that you can't live without. I want to bring you value every single week, and I love to end our show on a joke here at Tampa Home Talk. And I like to make it relevant to the show. Golf is a lot like taxes. You drive hard to get to the green, then you wind up in the hole. Thanks for listening to Tampa Home Talk. We'll be here next Saturday at 4 o'clock to talk to you more about credit and things on your credit you can fix, and we'll tell you how to get your credit score 20 to 50 points higher right away from some simple tips and tricks. If you missed any part of today's show, please check it out on our podcast or on our website at tampahometalk.com. Thank you so much for chiming in with us today, and we are out.